Hey everybody, back again. Super excited. Despite the market turmoils and all the noise and buzz around stablecoins, to be here with Sam. Sam is the founder and CEO of Frax. Frax is one of the top stablecoins out there and has managed to remain very stable throughout this unstable period. Sam, thank you for joining. Welcome.
Yeah, pleasure to be
Yeah.
here. Markets are a little bit in pain,
Yeah.
but it's been good for Frax overall. I think
Yeah.
Frax and Dai from Maker are kind of the last decentralized stablecoins at scale standing. I
Yeah.
usually mainly look at the ones above a billion market cap. Yeah.
Yeah, no, and sort of maybe share a bit of background on yourself, right, and how you got to stablecoins because you've been in crypto for a long time, right? I mean, you started off with a whole different chain on itself, and then evolved into running stablecoins. Maybe share a bit with the community, sort of, yeah, how
Yeah,
what your a
definitely.
bit in your background, and then how you got into Frax and stablecoins.
Yeah. So I got into crypto a long time ago, around 2013, 2014, while I was a student at UCLA. I got into
Yeah,
just, mining, just kind of the hobby mining space, mining Dogecoin, proof of work coins, script coins, all those things. A
yeah,
little bit of Bitcoin. It was kind of the tail end of Bitcoin being able to be mined by anything other than ASICs. And
ASICs.
that's when, yeah, those things were coming out, the first ant miners and stuff. After UCLA, I founded Everpedia with a few colleagues and friends. It's like a decentralized version of Wikipedia, and that's doing really well. And my colleagues are running that.
Yeah,
And in 2019, I had the idea of Frax, and that's basically what all my time is devoted to now. And Frax is interesting because depending on how you look at algo stablecoins, Frax is either kind of right on in terms of like the premise, or it's some people right now are really bearish algo stablecoins. But if you actually uh, think about the idea of Frax, when we actually came out with it, it was before ESD basis cash and all these things had like really
yeah,
taken off in
yeah. I
DeFi
remember.
summer.
Yeah,
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 and our premise was these things weren't going to work long term because they had no exogenous collateral, right? So Frax is the name comes from a portmanteau of a fractional algorithmic stablecoin, and the idea is that you can have a dynamic collateral ratio that adjusts based on market conditions, and that ratio is the ratio of hard assets that back the stablecoin supply, and illiquid or reflexive, whatever people want to call it, like either FXS or credit loans or things like that, that back this algorithmic supply, that the Frax that's on the open market for those that amount, right? That has to be stabilized by changing its supply, right? Supply to meet demand. And so, like right now, Frax actually 89% collateralized by hard assets. And 11% of the supply is algorithmic, meaning that it's not backed by ETH, USDC, other stable coins like DAI or like protocol owned liquidity. And so far, Frax has held its peg perfectly from launch. It's about 16 months old, and I think that this is the right idea. If algo stable coins are going to uh, be a thing, right? Which I think they're, people say they're the kind of holy grail or the final kind of incarnation of on-chain decentralized stablecoins. It's going to have to be something similar to Frax or something similar to Maker. I actually see Maker as like fairly like an algorithmic stablecoin, because recently they've been doing a lot of minting into Aave and different protocols, and Maker is fully backed, right? So in terms of, it has
yeah.
fully exogenous collateral. But
Fully collateralized.
yeah, and as we'll talk, I think I'll kind of explain my philosophy of what I think an algorithmic stablecoin is, and so like why I consider both DAI and Frax fairly similar. And so I think Frax is the right idea. I think Maker has the right idea, and I think right now at scale, they're the only two on-chain stablecoins that have basically done really well in this market and in obviously previous market conditions as well.
So I just want to highlight, right? So what you're doing, and just to put into contrast the value that Frax is offering, right? I mean, 89% of the stablecoin is backed, right? And put that into contrast where the fiat institutions and financial institutions that are out there today are mandated from a regulatory standpoint to have 20% collateralized, right? So of their whole exposure, they have to, at any given time, have to have 20% liquid in terms of their asset backs. They may have a better balance sheet in terms of have it fully backed, but at least they need to have 20% of that liquid. So when there's a bank run, and just that one contrast. And then the other contrast is, the world needs a decentralized algorithmic stablecoin. There's no doubt about it, right? And in my view, at least. And I think that's why Frax is super interesting, where you have that 10 to 11% or 12%, if you will, wherever it pegs on, that is algorithmically controlled. And either way, the mathematics and the signage that is out there is controlled by an algorithm, right?
Mm-hmm, exactly.
And I think that's super interesting, right?
Yeah, and like, for example, Frax has about 1.5 billion supply right now, and so at 89% backing, that's right around 11% of the supply is algorithmic, and so what that means is that about 150 million Frax stablecoins are algorithmic, right? They're not backed by hard assets, and it's pretty robust, and this collateral ratio changes. So in fact, it was at its lowest 82%. Now it's 89. I think in this market, it will continue to probably and reasonably go up into the 90s, right? Because people want to see safety and hard liquid backing.
Yeah. And so the algorithm basically increases and measures according to the volatility of the market, as well as the fear factor in the market. So the greater the fear factor, the higher that's interesting. Maybe, how does that work?
Yeah, so the CR changes based on a lot of different data, basically how much Frax is being redeemed or contracting, right? Which means people, the market is signaling that it does not think the current collateral ratio is good, right? So it wants to see a higher amount of backing, right? And so as a lot of stable coins have contracted in supply, DAI is contracted by 30 to 40%. Frax itself has contracted by 40%. Tether itself these past few days has contracted by over 10%. At like 80 billion, that's Tether's contracted by over 8 billion in just like less than a week, right? That's like a billion outflow a day on average. So we use all of those data points and entirely on chain. So the other thing to mention is that, for example, unlike Terra, every part of Frax is on chain, uses smart contracts. It's decentralized. What you see is what you get. It's basically every asset and collateral on the Frax protocol has access to the code that expands the Frax supply and burns the Frax supply. They're all smart contracts, so you can literally go look at them. If someone is asking, for example, what is the 89% collateral backed by, the front end does show it, but you don't have to believe the front end, right? You can just go directly to all of the smart contracts and you can see exactly what it is. That helps a lot in terms of design, right? I think the main kind of like problem, both for like things for example, like either Tether and especially, for example, Terra, is like you have these like scares where it's like, are they, oh my God, everyone's exiting Tether. Does that mean it's not solvent? Like you can't check, right? I'm personally fairly fine with Tether. I think it's fairly safe. I obviously think USDC is safer, but I'm not like I don't lose sleep over Tether very much. But for example, with Terra, right? No one knew, like, are they buying Terra with the BTC to stabilize the peg? How much are they doing it? Like, are they doing it a little bit, or like what's going on? All this stuff. There's none of that with Frax. You can just look and you can see exactly what's going on.
And you know, to be honest, I think what you Frax, you know, sort of coming back to Tether, right? And you mentioned Tether, right? I think Tether they built a smart contract on top of Bitcoin using the Omni framework at that time, right? And they were the first stable coin to come to market, and they worked and built their framework in a market which was really dominated by centralized exchanges at the time. There were no DEXs at the time. There were no AMMs, right? It was all really centralized exchanges, and they built the currency that allowed for the interworkings between these centralized exchanges. And they went through super hard times, but they always came out, and the market wasn't as big as it is today. And so maybe they came through that, and they learned so much that they built out these processes. They had challenges with the governments, they had challenges with hacks as well, etc. But they withstood each of those, and they grew. My belief is stronger. And I've worked with Paolo and the whole Bitfinex team, or the Tether team, and I feel like you just said, they did really well, and you feel comfortable with them, and you can sleep at night at how much they can digest and absorb, because they've become pretty big, and I'd say sort of maybe to an extent too big to fail. But I think where Frax is super interesting is you've taken a lot of that similar, or my interpretation at least, is you've taken a lot of that model and applied it into a DeFi world, right? And where a market dominates with decentralized exchanges, AMMs in the marketplace, and you've managed to establish Frax with those decentralized exchanges, decentralized farming, with Convex, with Curve, and then ultimately also with the likes of Aave, and created an environment. How's that journey been for you? And how did you see and spot that opportunity, you know, when the DeFi summer came out, and then you were really well positioned in that. So yeah, maybe share some insights in terms of that journey. And I think that's really where you shined, right?
Yeah, definitely. And
You and your team.
Yeah, and just to comment on the Tether stuff, like you said, you're totally right. In fact, I actually saw this tweet. I don't know, I don't remember if it was like Joe Weisenthal from Bloomberg or someone. So don't quote me on it. But the other way to look at the whole Tether thing recently, that everyone was redeeming it and stuff, is that it's actually strong indicator that the Tether is sound when you can actually do $1 billion of redemption nonstop every day for a week and still keep going. Like
Yeah.
that's called a stress test, and passing the stress test with
Yeah.
so there's
Flying colors, right?
There's
Yeah.
the other side of that as well, which people don't consider. People are like, look, everyone's leaving. There's something wrong here. It's like, okay, but everyone's leaving and they're getting $1. Like that's exactly what's supposed to happen, right? But yeah, for Frax, yeah, we're really big on in terms of the DeFi and crypto native. For example, Frax has 20% of the total liquidity on Curve in total. The Frax pool is like is huge, and it like fuels a lot of DeFi liquidity, DeFi yields, and those are sustainable yields, right? So Curve distributes its transaction fees from Curve to CRV tokens, right? So it's not like the tokens do not have cash flow, right? They clearly have cash flow, and Convex built on top of that, and they also built on top of our Frax gauges as well. So we're just building a lot of very sustainable, DeFi native things, and taking things sustainably and slow, right? Like Frax supply is 1.5 billion. It was almost 3 billion before the market contraction, right? But that and everything is fine, right? There's a 40% contraction. Peg is perfectly sound, like I was saying with Tether. That's actually that's exactly how it's supposed to happen. If people want to redeem or sell, then it's supposed to perfectly work exactly as intended. So that's been a really big thing to demonstrate our strength in this area.
Yeah, so that's an interesting fact. I didn't know that. So you actually, I mean, yeah, you can see that, right? I mean, like you said, what you see is what you get. You can see it online. you've contracted in the last sort of, let's say, 10 days, by more than nearly 2 billion, and you've managed to absorb that all the while holding the peg.
Yeah, exactly. About a billion, right? And
Yeah,
definitely, and
about a billion.
nothing has changed, right? Everything is sustainable. It's at peg. Things are looking good. Just like Maker, right? So shout
Yeah,
out to everyone with Dai and stuff, right? They've
with Dai.
been perfectly
Yeah,
at peg as well. And I think it's really important to just highlight, like, at scale, and what I mean by that term is stablecoins with at least over a billion in supply. It's very difficult to maintain your peg with there's not fundamentals behind it, right? It's one thing to have like stablecoin with like 50 million or 200 million supply or something, right?
yeah,
And like
yeah.
200 people holding it or something, or farming with it, versus like thousands and thousands of people that hold it independently, right? And it's on multiple chains, DEXs, AMMs, and stuff, right? And it has over a billion in supply, and that's a different animal, right? And so, and then Tether itself and USDC are even further along at different leagues with tens of billions of dollars, right? So
Yeah.
there's levels to this.
And if you look at, sort of, not only are you involved and very engaged with a lot of the DeFi world and community, from exchanges and etc., you're also on multiple chains, right? I think you're one of the sort of algorithmic coins that's on nearly all the chains, on most chains. I remember going on to Multichain, as it's called now, or AnySwap at the time, and I just saw Frax on every single exchange, on every single chain. It was like super impressive. So yeah, so how has that been as a challenge? And do you see differences between the chains?
Yeah. So at the end of the day, right? Like if Frax or anything is going to be successful, there has to be demand for it organically, right? Not by
Yeah,
paying high yields or anything like that, or like inflating
yeah,
your governance token nonstop or something like that. Frax as a protocol overall is actually profitable. We make over $100 million of revenue. I think with the last numbers
wow,
were 115 million, even in the current market
wow,
conditions, and we're
yeah,
doing extremely well. So we're also deployed on 12 different chains, if I remember correctly, and might be actually a few
yeah,
more, but we're natively deployed there, meaning people can mint and redeem Frax on those chains through system contracts. And we're, like you said, if you go on any of these chains, Moonbeam, Phantom, Polygon, BSC, Arbitrum, Optimism. There's Boba, other ones. I'm forgetting a few of them. You'll see there's Frax pairs, Aurora, right, near, and stuff like that. There's Frax
yeah.
everywhere, and there's Frax liquidity. There's Frax usage, and so I think right now the two predominant stablecoins for like decentralized usage and DeFi is Frax and Dai, other than the fiat coins, obviously.
Yeah, and I think that's, I mean, ultimately, any coin, there are two things that really drive, I mean, for me, is presence, right? So can I use it anywhere and where? And then ultimately the utility element, right? So not only is it earning yield, which is great. Obviously, we all love to earn yield when we're saving. So yield is another way of saying interest or savings account when you lock it up. But I mean, in essence, you've also got to be able to use it in certain elements, areas, and hence provide utility. And in the DeFi world, the utility has largely been being able to have swappability, exchange, trading, and then migrating a Frax from one exchange onto another exchange, and then swapping it out into another currency or with another pair.
Yeah, and I think
How have you seen? Yeah,
Yeah, I think like
yeah,
the next phase of this stuff, just like you're saying, is making sure Frax is integrated in every place, like even fiat on and off ramps, right? So it's like truly cash equivalent
yeah,
on places like
yeah,
Coinbase, FTX, Binance, and things like
yeah,
that. And you brought up the savings account stuff, and maybe this is a good time to put in that Frax is actually has two stable coins. So one is the Frax price index, the FPI stable coin, which is pegged to the CPI. So it's actually it's basically an inflation resistant new peg stablecoin. So our project and the entire ecosystem, greater Frax economy, it revolves around two stablecoins, Frax and the FPI. And Frax is dollar pegged, whereas the FPI is CPI pegged stablecoin. And so some people ask kind of, how come Frax doesn't have like euros or like yen and stuff? There's only dollars and then this FPI stablecoin. And the way that we view things is that the dollar is king in terms of unit of account and global commerce, at least right now and for the foreseeable future. But if DeFi and crypto is to have any possible unit of account that's successor to the dollar, I think it'll be something like the FPI, where it is pegged to a basket of consumer items, because that's ultimately, for human beings, the thing that keeps our standard of living the same, right? Like the physical things we care about, like food, energy, oil, cars, electronics, and these kinds of things. And that's what the FPI is pegged.
And so that's how we sort of reconnected and got into a deeper conversation talking about Truflation, right? So when we were super keen to ensure, because one of the things that we got, that I launched Truflation.com was out of the belief that the inflation metrics that we're seeing and we're told today isn't necessarily an accurate reflection of what we're actually physically experiencing. And I think the population and the general consensus in a society or in a nation is that is an unawareness or an underappreciation of the value of a dollar. A dollar is a dollar. It's a dollar today and it's a dollar in a year. But actually, with an inflation rate of 10%, your dollar is only worth, let's say, 90 cents versus the $1. It still says $1 on that piece of paper, but it's actually buying you, 90 cents worth of goods. And so that's why I think the FPI is a super interesting innovation and a drive in the marketplace that we need to protect the purchasing power of individuals, and not have that separate tax brought onto us through inflation that ultimately loses and diminishes the purchasing power that everybody has. So that's super excited.
Yeah, and not just that, but also if you think about it, right? Like everyone's asking about, are these dollar pegged stable coins, do they have like decentralized collateral and stuff? But a lot of people forget the peg is not decentralized, right? All of these dollar stable coins, they passively essentially are passive takers of the Fed's monetary policy, right? Which is fine because a lot of people want, dollars, and everyone does their counting in dollars. But if the goal is to have, self-sovereign stable unit of account, there needs to be experiments like the FPI and more, right? That basically have new units of account that keep standard of living the same, but they're not passive takers of the Fed's monetary policy, right? And I think, for example, Balaji, who is like a backer of Frax, but also just has a lot of thoughts on this stuff because he's been a really crypto native guy since the early days. He calls these flat coins instead of stable coins. They're
flat coins. Exactly.
Yeah, the purchasing power, not necessarily stable to a dollar peg, because that's mostly what stable coins have come to mean. And so FPI is kind of the first flat coin, is the way that he puts it. And I think there's going to be a lot of them. Like, for example, there's already another project called Volt Protocol that also is pegged to CPI. And so they have the same peg. And what's really cool about that is I actually think that this makes FPI stronger and Volt, because when there's a Schelling point around a new unit of account, you can build deep liquidity. You can build curve pools around it. You can have Uniswap concentrated liquidity. People can start using this unit as a potential alternative and maybe later a successor to accounting in dollars, right? And the more CPI pegged or like self-sovereign pegged stable coins that follow the FPI's kind of track, the more likely it is for this unit to actually be a legitimate alternative unit than the dollar.
Exactly. And like with you, I mean, Balaji is also engaged with Truflation and really was very supportive and inspirational to really build this product out and really capture a cryptographically verifiable source of truth for a pricing index that impacts the population or everybody. And so, yeah, so super keen to sort of see how we ensure the protection of the purchasing power or the flatness in the value of what you can purchase with a dollar, right? Because in essence, let's not forget, the reason why we created these units was to enhance and to increase the velocity of trade. Mm-hmm. Right, and the exchange of goods and services, and put a uniform, value to and that exchange of services on products and goods. And so, yeah, I think this is a way to get back to that.
Yeah, exactly. And I think Balaji really sees the importance of that, and so does the Chainlink guys, right? Because we use the Chainlink CPI Oracle, and we're really looking forward to working with you guys at Truflation to create good CPI alternative measures of inflation, or and bring all of these price data to the blockchain, right? And so the idea with the FPI is, even though right now it uses the Fed's definition of the CPI basket, the whole point is that it should not end up being passive, right? Acceptors or takers of the Fed's monetary policy. So it's going to be in the medium and long term, the CPI gauges and what the weights are, and the prices and what items are in there are going to be done with on-chain governance, with new oracles, like Truflation's oracles, and all of these things that make it so that it's self-sovereign rather than passive in terms of monetary policy.
And I think exactly to that point, right? I mean, we now are in a situation where we have Oracle services, and you have a lot of traditional financial institutions that have invested in so-called TIPS, right? So Treasury inflation protected securities. That is, and then, if those are backed and based on a 6 to 8% inflation rate, whereas actually inflation is really at a 9 or 12% ratio, what do I need to do? There's a huge arbitrage between what a real inflation protection is and what do I need to do to protect the real purchasing power from an economic standpoint of my dollar tomorrow. And if I'm sitting on that dollar, I want to make sure that happens. And I think there's going to be a larger increase in economic injection and financial injection into crypto for something, or a reliable source of truth for inflation data, and financial products that are going to adjust and allow me to manage that arbitrage between actual inflation and the reported inflation.
Yeah, definitely, and exactly right. And I think the thing is, even though right now the Fed is raising rates, right? I'm sure everyone that's listening, or going to be listening to this podcast, they're gonna be thinking about, in this rising rates environment, right, where risk assets are actually losing value against the U.S. dollar. What's going to happen to the consumer inflation rate? In fact, I actually think, and I hope I'm wrong, to be honest, but I actually have a little bit of a gloomy outlook, that I think there's a high chance of stagflation, or this situation where there is no inflation on risk assets, right? But there is inflation on consumer assets, which is very bad, right? Because our lives and our standard of living is composed of consumer items, food, rent, services, and these things. And without them, or if they get too expensive to afford, our standard of living goes down, right? But the thing is, previously we were in a all-out inflationary environment, right? Where stocks, crypto, every single thing because of more money printing was actually going up, right?
Getting
And
up.
now we're in a deflationary, at least the past few weeks, time against risk assets, right? I mean, you look at the price of all crypto assets and stocks and all of these things. It's not actually inflationary against those assets. However, the price of consumer assets, energy, oil, food, all of the important stuff that we care about at the end of the day, those prices are continuing to stay elevated and unfortunately rise. Hopefully they don't, but my pessimistic outlook is that they probably will. So it's extremely important to have things like the FPI that are pegged to those assets, right? And then also reliable pricing of those assets like Truflation, oracles, and these things. Because at the end of the day, those are what's important, right? Like that's what humans care about. That's what our
Yeah.
standard of living is composed of.
And it impacts all of us, right? And so that's sort of, I mean, maybe it gets a bit more political, this question, but I mean, in the end, there's been this big, I mean, I'm sure you've seen the Twitter disputes between Bezos and Biden around taxing, increasing tax levels in order to bring down inflation, which sort of seems, yeah, what's your view on that? And sort of, I'm enjoying that debate, to be honest. I just really think it's a good opportunity to see and have open discourse about how we can improve our economy and improve visibility and transparency into pricing and the operations of a Fed, of a government, and how tax does implicate
Yeah.
everybody. But it'll be interesting to hear your perspective
Yeah,
as
I
well.
mean the issue that's going on right now is there was uh, inflation in every type of asset. There was generalized inflation, right? And
Yeah,
everyone thought that they were really smart because they were quote quote making money just by buying anything that's not cash, right? Holding cash. The issue
yeah,
now is with rising rates, you can stamp out currently in this environment risk asset inflation, but then what do you do about the consumer product inflation? And so I think there's this discussion of like every kind of lever that's on the table, like taxation. I don't think that's going to help personally, or like other kinds of policies to actually lower the price of consumer items. But I'm actually not sure. I mean, I'm not like I'm not the Fed chairman. I'm not Jerome Powell, and I don't pretend to know like all of
yeah,
this stuff. But it doesn't look very good
yeah,
to be honest. And I wish I could come here and be like, oh yeah, all everything's peachy. But it's gonna be hard, like because people will
yeah,
need these consumer items. They need oil, energy, all of these things, and there's a finite amount of ability to produce those things, right? And
yeah,
you can no longer print more money to spur the production and reinvestment of more of those consumer assets because you already did that, right? You did that during the pandemic, and so
yeah,
you basically burned that dry powder, right? That's done. So then now the only thing you can do is either tax more or tighten to get the risk asset inflation out of the market, but that actually stops reinvestment and production of consumer items, right? Because when interest rates are high and stuff, everyone wants to just sit on cash/treasuries, right? And then
yeah, yeah.
that's the bad zone, right? That's like the stagflation corner where it's like you can't, you're boxed in, you don't know what to really do. So I'm curious to see what Jerome Powell kind of does in the next 6 to 8 months.
So we at Truflation, we've aggregated more than, from 45 different data sources. We aggregate over 1 million different data points across 12 different categories of pricing, right? And those include commodities. Those include, so we can actually see that in the future, we have an index that provides us insight into that future around those commodities so that we can then see what is it like, what's likely to happen. And the biggest changes that we've seen so far has been around electricity, energy, gasoline prices, transportation, but then also food. And so food's been going up in prices, or shrinkflation is the other thing that's happening, where the size of the foods and the dishes and the packets that you get are being reduced at the same price or slightly marginal lower price. And psychologically, that seems to be working for the big brands. But then alternatively, down the road, we're seeing a rise in the sort of ground materials needed for food, right? Wheat prices are going up. And we're seeing a struggling in being able to keep up with the wheat production, especially given that 30% of wheat supply comes from Russia and Ukraine, and they're being sanctioned at the moment and going through war. And not only is the supply not getting to market, the planting and the sort of laying the seeds for next year is also going to struggle. And so you look at that, and where's that going to take us, and how do we manage inflation in an environment like that and make sure food's on the table? Maybe vertical, farming is going to be more popular. And anyway, I don't know, but we are creative as humans.
Yeah, and these next few months are going to be really, really important for just builders in crypto in the real world, like you're saying, and everything, because in these times of rising rates, lower prices and risk assets, but inflation and consumer prices, it's almost like a jolt of reality, right? Like you're not going to make a bunch of money by buying pictures of monkeys, right? Or like investing in like the most recent ICO or whatever. It's going to take a lot of actual building of value, right? It's literally the exact opposite market condition where it's like, what is the fundamental core value humans care about? It's consumer items, because like we're physical people and we care about these things, right? And so everything that has cash flow that is able to produce consumer items, or it's cash flow that stays stable to a basket of consumer items, or that there's cash flow for investors that earn that cash flow, then they can go buy the baskets of consumer items, right? And keep their standard of living the same. Those are the assets everyone is going to be looking at right now, because otherwise, if they're not going to be investing in those, they just sit in treasuries, right? And increased rates, right? They don't need to buy the latest NFT or something like that. They just basically hold U.S. treasuries, and there's going to be, I think the rate target for the end of the year is even 3% or more, which I think this is the first time in crypto's 10-year existence that it's going to be in a environment that rates are actually substantive and not like essentially zero. So it's going to be really interesting to see how things work out in this environment.
Yeah, so we just had everybody expected and anticipated a 50 basis points rate hike, right? And we still look at the market, how it's reacted to that, right? We knew it was coming. We were expecting it. And still, given the certainty that we knew it was coming, we still crashed, right? I mean, the markets came down, valuations across the board in fiat as well as in crypto are both down. And, what's the next? We're all expecting another 50 basis points to come and hit us in June, right? And so that's what, the 10, 20 days away. And so that's going to come and hit us. What does that look like? And what does that mean for, at least from the financial perspective? And I think, to your point, builders are what we need now, right? People that are going to really build value going forward, right? Both from a software development standpoint, to be able to allow participants in the ecosystem to accurately monetize their development, their products, and their value and the worth that they've been adding to the ecosystem, but then also to ensure there's enough supply on the table and make sure that they get rewarded for having worked through these hard times and be able to provide, with accurate value being given back to those builders. That's going to be really important in this cycle going forward, I feel.
And
how do we ensure that?
I hate to be the bearer of bad news as well, but like, that's not the only rate hike coming in that's in June, right? Like they expect them to come almost every other month for the rest of this year. And that's I have this thing that I say, it's like, we're not even at max pain yet, right? And like max pain is like total,
Yeah.
complete capitulation. And to be honest, like that's basically what we build at Frax, that for the times where it's like it's this bad, you want to hold the peg, be profitable, be building things that are important, like the FPI,
Yeah.
like the Frax stablecoin, all the tech that we have can keep
Yeah.
cash flow positive. Because the whole point of being a stablecoin or a flat coin or whatever that is rock solid is you're supposed to be able to, in this extremely difficult economic environment, to actually provide the actual stability that people want. Otherwise, they're just going to dump your stablecoin, right? If they don't feel like this protocol is resilient enough and things like that, then you're not going to get the benefit of when people demand stuff like the FPI or like Frax or like dollar pegged stablecoins. They're not going to hold yours. They're going to hold the other ones that they feel are safer. And the good news is we've perfectly executed, and like everything is at peg, and things are doing well. So we've actually benefited from a lot of people saving in FPI stablecoins, using them sustainably growing overall. So it's been good but difficult is how I like to put it.
Yeah, no, I think that's exactly what we need, right? The world needs an insurance policy for everyday participants in an economy to ensure their purchasing power. How do we ensure the people's purchasing power? And maybe it's a flat coin, maybe it's an insurance coin or some other model like that, but that's what we need to have. And to go forward to ensure that your purchasing
Mm-hmm.
power stays the same. And that's ultimately what a stablecoin was built for, right? To ensure a less volatility and more anticipation of what you can see is going to come in the future, and how this dollar is still going to be a dollar tomorrow, versus the crypto class or the crypto coins or Web3 coins, whatever you want to call them. They're slightly more volatile, right? So they vary if you translate them into a more fiat currency, unless we continue to drive, or not only unless, sorry, we have to now drive more utility with our tokens in the
Mm-hmm.
marketplace, right? And so that, I think, is
Yeah,
an
and
obvious point.
basically it comes to
Yeah,
the other thing. I kind of look at these things a little philosophically, but a little like kind of mathematically, which is like I think interest rates are kind
yeah,
of like the shock, like the electric shock to like speculative frenzy, right? And so it's like everyone was like
yeah,
making money and like investing in this stuff and whatever, and like every kind of like
yeah,
rate hike is kind of Jerome Powell being like, snap out of it, right? Right? Like snap out of it and like go back to the
yeah,
fundamentals, right? And we've always been a fundamental player in terms of shipping, in terms of just having things be very sustainable and not expecting, high
yeah,
yield and like subsidized yield to ever be needed, and things like that for Frax and FPI adoption. And I think that's why we're doing really well in
yeah,
this environment. That's why Maker is doing really well in this environment. Dai is holding steady.
yeah,
They
yeah.
don't build relying on a lot of subsidies or anything really, and so that's those. This is the time for like those kinds of builders to excel.
One of the things, it was funny, I was on a conversation the other day with a counterpart, right? It's like there's been sort of two different philosophies, particularly, I don't know, there's Elon Musk. I saw his interview I think, where he was with the Financial Times, where he was saying that, factory workers in China, they sleep on the factory floor, they just work on the factory level, whereas, his factories in California haven't been like that, where people have been sort of, they don't want to work really, right? It's been hard to get them to the table to actually build cars. And in order to hit his metrics, he needs more productivity. But neither there, here nor there. One of the analogies was, oh, you know why that's the case? Because, in Hollywood, we show pictures where I have Spider-Man, Marvel, right, where I get bitten by a nuclear, a infested spider, and then I get superpowers, and then I don't need to work hard. Whereas in China, they have 70 series of wushu, right? Where you have to go to a monk and into a monastery up in the mountains, and you have to fight for 17 years to become a black belt, uber kung fu artist, right? So the whole, and you have to have intellectually studied, you have to have understand the philosophy, work with the flow and the water, right? The 10 Rings movie that came out, right? So there's a whole different shift in mindset that I think is coming through. And I think crypto has very much adopted a meritocracy driven environment where, I mean, when we meet, every time I meet you, Sam, it's on a Saturday, it's a Sunday, we're talking shop, you've just come from the office, we've just finished up a number of phone calls, we've been moving things, we've been coding. So it's an interesting, different perspective in where the world is moving towards and sort of what's needed to be
Yeah, and
successful
yeah, a lot of it
in
is
the
culture,
future,
like
right?
you're saying. I mean,
Yeah,
I don't even usually know what day of the week it is
yeah,
because Saturday, Sunday, Monday, Wednesday, it all looks the same to me. I'm always doing the same thing. I think a lot of people that are in the Frax community and stuff, they always see me online because like I'm a pretty simple guy. I
yeah,
build Frax stuff. I maybe do some
yeah,
lifting, and then that's really it. Once every few
yeah,
days, I might
yeah,
take like a couple hours breather and stuff, but I'm just really into what I do, and
yeah,
it's good in this
yeah,
environment, believe it or not, for people that are really motivated to build stuff out, like you're saying, that are uh, you know driven in their culture, and every Frax core dev, like whether it's Travis, Drake, Rich, Justin, Dennis, all of them, and
yeah,
and
yeah,
uh, they're all the same. So we're all always around the clock working, building, and it's a good thing because in this environment you get rewarded, whereas in the other environment where either it's less rewarding monetarily because everyone's just doing fun
yeah.
stuff and making money, but no matter what the environment, we're always doing the same thing, which is always shipping and working to make this a huge thing.
Yeah, and I think that's the fun thing about this, sort of, yeah, it's the greatest time to be alive. And if you have a good mission, you can really have a significant impact. And that is really rewarding, right? I look at, Dan, who's just flown, he's in Korea, it's 4 a.m. as we're doing this recording for him. But he gets up, he's super excited, and he's so apologetic because he missed it by an hour. He didn't get up at 3 a.m. to do this call, but he really loves and enjoys it, right? And so participants in this area, meeting great people, being able to participate and engage and actually show, not only participate, you're not a lurker in the background, they're actually actively engaged and delivering on it. It's super exciting to see. And the changes, whilst we're going through a huge change right now, after the last week in terms of what's happened in the stablecoin market and with a whole layer one blockchain, but the learnings in the community are taken in really fast. They're interpreted and converted as a whole society and as a whole community. We move forward based on those learnings, and how do we optimize that, right? And we're doing the same with inflation data and protecting purchasing power in a flat coin, stable coin, insure coin, whatever we want to call it. But that's what's going to happen going forward. And I think Frax is going to be a key part in that. And hopefully we can work together more often
Yeah, and
and
we're
really
just
drive this
excited
vision
to do
home.
it, right? Like you're saying, a lot of the part
Yeah.
of just being, really, really into like doing all this stuff every single day of the week at any time is you're just really into it. When it's fun
Yeah.
for you, it's not really work, and
Yeah.
that's exactly what it is for us. It's just a lot of fun, and it's really, really into it.
So, all of you, in order to be super excited in life, find your work life mesh and mesh the two together so that you can actually have and enjoy what you do, and at the same time get the satisfaction and make sure that you're doing it every day, all the time, within
Exactly.
different measures. Thank you, Sam. Super excited, man. How can people, I mean, obviously, they can go to Frax and search Google, find out Frax, learn about it. You're really active on social media, on Twitter. Maybe what's your Twitter handle? And Yeah, and if they have any questions,
So
is there a
I'm always
Telegram
on
group that they
Twitter,
should
and I'm
join,
always
and
on
or
Telegram.
Discord, which is the better channel to sort of engage
Yeah,
with
I'm
the
always on
Frax
Twitter
on
and
Telegram?
Telegram. It's actually the same username, just my
Yeah,
name, Sam Kazemian.
yeah,
And check out the Frax Telegram channel. I'm
yeah.
always there. And take a look, and get some farming going and yield. Check out FPI stuff. It's growing really fast, and hit us up. We're very available, and we're
Yeah.
very, very excited to work with anyone.
And super engaging, always ready to talk to everybody. So please, if anybody wants to find out more about Frax and FPI and maybe FTRU or something, if we work that out in the future, yeah, really thank you, Sam, for your time. Always great insights, and it's obviously a perfect time to learn about stablecoins and in the future what a flat coin is. Start now, get into it, help out. And if you really want to get engaged, I'm sure there are ways that either with Frax, with Truflation, with any of the other protocols, Volt, DAI, get involved, reach out, learn, and participate. Thank you, everybody. Thank you, Sam. Awesome.